Hey everybody, Joshua Phillips here with Churchill Mortgage. It is January the 24th. Happy to be bringing you a market update. And as I put in the headline for this video and on the email I'm sending out, let's talk about President Trump. Boy, he's been busy this week as he's getting started in his presidency. And as you can see here in the headline from yesterday, President Donald Trump says he'll demand that interest rates drop immediately. First of all, I love the idea. I would love to see him make mortgage rates drop. But let's talk about that for a little bit. What exactly can Trump do to make mortgage rates or any interest rate drop? In reality, he can't really do much of anything other than talk about it. And which, not a bad thing. We all want to see mortgage rates drop. But practically speaking, he cannot influence the 10-year Treasury yield. He cannot influence mortgage rates because we'll talk about it more when we look at our charts. But mortgage rates derive from mortgage-backed securities, which are bought by private companies, unless he wants the government to start buying mortgage-backed securities again. Now, what can President Trump do, or what can the government do to help? Well, what we need inflation to keep coming down. And he talked about that when he talked about seeing interest rates drop. So what I think he can do is he can, as he likes to say, drill, baby, drill. And I don't, people who watch this may have different opinions on Donald Trump, but, we'll just keep those to the side. We're just talking about what he can do to help mortgage interest rates. But he talks about drill, baby, drill. He talks about bringing gas prices down. Now, that's one thing, if he can bring gas prices down, that's a big influence on inflation. And if he can bring energy prices down, other prices down, inflation improves, the Fed feels more comfortable with lowering the Fed fund rate. And yes, that may see mortgage rates and other rates come down. Probably not going to happen quickly. But that's certainly, I at least love the sentiment that he's wanting to do something. But that said, I don't think anything is going to happen instantly. He cannot demand that interest rates come down, unfortunately. And there's not much directly and instantly he can do to make that happen. He also can't tell Chairman Powell what to do. Now, the Fed meets next week. But it's expected they're not going to do anything. It's probably close to 0% chance they're going to lower the Fed fund rate. Although, as we've been saying, they lowered the Fed fund rate 1% late last year. It didn't really do anything for mortgage rates. Mortgage rates actually have gone up. So let's jump over here from this headline at CBC. Let's jump over here to our mortgage-backed security chart. Mortgage-backed securities where mortgages are bundled and sold as securities, and that really drives what mortgage rates are doing. All you need to know to read this chart, as always, is green is good, red is bad, and the higher the security price, the better mortgage rates are doing. And we just use this as really the primary way to visualize what's happening with mortgage rates. And as I always say, every mortgage professional in America, I'd say pretty much every mortgage professional, has this screen up, probably with this company, looking at mortgage-backed securities and what's happening, because it helps tell us what mortgage rates are doing day to day. Now, we had, I think when we did the last update last week, we had that nice green candlestick. We had the CPI, Consumer Pricing Index, the PPI, the Producer Pricing Index. We saw those coming in a little bit cooler than expected, and indicating a little bit lower inflation. And we saw the nice little move higher, those green candlesticks. Well, this week's kind of been just flat. We're trying to come up against these resistance levels, these moving averages, and we just didn't really move this week. There wasn't a lot of beyond Trump and all that. There wasn't much economic news. And I think the market's still trying to figure out, tariffs and all this talk, like what exactly is going to happen. So the market's just kind of like hanging in there going, let's just wait and see. Again, if we pull out, as we often do, I'm going to pull this back to a full year chart. Again, just to give a little better perspective. We saw mortgage rates really improve nicely, get down into low sixes, even maybe in the high fives back last September. And then we saw rates jump back up as security prices fell, and we hit that worst level back a couple weeks ago. And so yes, as I said in the last video, we did have a bounce back up, but you do have to keep, yes, we'll take it. Yes, green candles. But we'll have to take that in perspective that, where we got that nice bounce, we have fallen a long way. So, and with mortgage rates really expected to stay probably in the sixes unless something big and unexpected happens. Hopefully throughout the year, we'll see security prices slowly improve again and mortgage rates come back down a little bit. Maybe we'll get back closer to 6% by the end of the year. That's the expectation at this point. So anyway, hey, here's hoping that Trump can do something amazing and talk those rates down and things move a lot faster than we hope. But, my job's to just keep real information out there for you. So rates didn't really move this week. They are a little bit improved from where we were a couple weeks ago. We just need to see what happens in the coming weeks with economic news as we hope inflation cools. All right, you take care and have a great weekend. Let me know. Sending us out to both clients, for myself, for my wife, Amy, either of us are here to talk with you about your mortgage needs. If you want to talk about interest rates, you want to talk about getting pre-approved, we're here to help. Have a great weekend. Take care. Bye.